after
Gotcha!
I'd rather not fly. I would rather not fly out of Intercontinental if that's okay. I would
Good morning. I am Missy Bender, President of the Plano ISD Board of Trustees, and I call this meeting of the Plano ISD Board of Trustees to order at 8:00 a.m. on June 27, 2018 at the Plano ISD Administration Building. If during the course of this meeting discussion of any item on the agenda should be held in a closed session, the board will adjourn to closed session at that time. On the board's behalf, I wish to extend a warm welcome to all who are present and to our web and video viewers. We will conduct our meeting focusing on the district's two major goals: ensure continued improvement in student learning and ensure efficient use of resources. Let me introduce my fellow trustees and staff. Seated to my left, and only person on my left, is Sarah Bonser, Superintendent of Schools. And everybody else is seated to my right. We have a Board Vice President, Dr. Yoram Solomon, Trustee David Stolley, Trustee Jerry Chambers, and Executive Assistant to the Superintendent Board of Trustees, Sharon Nowak. We have an item for discussion and action today with closure required. And Randy McDowell, our CFO, will begin the discussion regarding the request for proposal 2018-047 commercial property insurance. Mr. McDowell.
Good morning. Thank you, President Bender, members of the board. I can't think of anything more exciting to talk about 8 o'clock than commercial property insurance. And so this is a bid that honestly we've been working on. It's taken a lot of our time for about the last 3 weeks with a couple of insurance consultants. It is pretty complex, but we've tried to simplify it for you here today. We were notified back in mid to late May that the current policy that was going to be the 5th year of that term had some significant changes in the renewal, and that policy does end on June 30th. And so the current carrier, which was Lexington, which is an AIG company, it didn't have any layering that we'll talk about later, and it was also just with one carrier. The limit on that policy was $750 million total coverage. So if we had a claim, it would cover it up to $750 million. The wind and hail deductible on that expiring is 1% of the property value. Previously, that was $100,000. After the 2016 claims, it was raised to 1%. And then we'll talk about the renewal here in just a minute. The premium on that was just under $950,000, and that's just under a 6-cent rate. The year 4 policy, again, the upcoming one would have been the 5th year of that policy. And that policy was awarded to Insurica with Lexington as the carrier back in 2014, and then it had been renewed 3 additional times. On the final year of that, the renewal that Lexington brought back to us dropped the limit on that coverage to only $25 million. And so any claim we would have had over $25 million, it would not have covered anything in excess of that. Also, the wind hail deductible had been raised to 5%. And so when a district like us has a 5% deductible, our total property values are about $1.6 billion. And so for every 1%, that's about $16 million that the district has exposure if we have a significant, it's typically going to be a hail claim. And so on a 5%, that would be about $84 million of exposure to 5% deductible. So we get a really big hailstorm that comes through, damages a lot of property. The district could have potentially been at $84 million. And that would be a significant amount of our fund balance. That gives us a lot of exposure. The other thing on that is we continued to negotiate, and Insurica did. Lexington was not willing to increase that limit at all. They worked on that for some time. Also, Lexington was not willing to budge on the wind and hail deductible to come down on that 5%. And so at that point, we realized we were going to have to do something different. And with it being such a significant change, we didn't feel like we could just negotiate the terms of the previously awarded bid because it was so different than the bid that had been awarded. And so we began a bid process. Again, we had some insurance consultants working with us. The RFP was sent out to over 120 insurance companies. And then we had 3 different phases in this bid, and this is part of what makes it complex. It's a process I've never been through the full 3 phases, but I think when I'll explain it, you'll see why. So the first phase, the insurance agents, of those 120, they could submit an RFP and they had to request which carriers they wanted to represent, which ones they wanted to submit bids on. The reason we have to do that is there's only so many carriers out in the market, and a carrier will only bid with one insurance agent. And so if you get Travelers, which really isn't even in the market anymore, you get Munich or somebody like that, they will only quote one company. And so they get them locked up, and so you can see that that's where the problem comes in. There's not enough of them to go around, especially when we look at this layering that we'll talk about in a minute. And so we evaluated those. I'll show you how that worked. And then we ended up assigning agents to just certain carriers. We evaluated those based on their priority request and their experience with the different carriers and the reputation of the agency. Then the next phase, the assigned agents were asked to go out and shop coverage for their assigned markets in $10 million limit, $25 million limit, and possibly a $50 million limit. And then they reviewed those. We scored those. We had a committee that looked at them with our consultants. And then we had to award all markets to the highest ranked proposer in phase 2. And then in phase 3, they went out. The intent was to release all markets, and so they could go out and put together the whole plan. And we'll show you what that looks like. So in phase 1, we received 8 responses out of the 120 RFPs that went out. So we had 8 different insurance companies that responded. You can see those listed across the top here. We looked at their experience. We looked at the number of school clients they have, commercial, wholesaler. We also looked at the volume that they have that's not listed here. And then on the 3 different categories, they had to list in rank order up to 6 companies that they would like to work with, up to 6 carriers. We went through that process. Everyone got their first choice except for Wortham because someone else had gotten that. And then again, we looked at volume, we looked at rank, we looked at all that, and we assigned those markets out. And so 7 of the 8 companies were assigned markets. And so we asked them to then go out to market and start shopping and putting those plans together that were in phase 2, potentially $10 million, $25 million of coverage, and $50 million of coverage, looking at different deductibles, maximum coverages, premiums. And so then we had to analyze that. We only received, yes, go ahead.
Quick question on the previous slide. Can you explain inland marine? I looked at it and I wasn't sure what it meant.
And so that's going to be a lot of our property. That can be things like towers. And some of our insurance guys are here. They can explain. I'm sorry.
Contractors, equipment, mobile equipment, towers, like he said.
Okay.
It's not your standard building or contents.
Gotcha.
Does that help?
It's not in the water.
Now, I don't know why they use marine on that. Okay, so when we looked at those, Insurica, who's the agent that's had the district for 28 years, really just responded with the Lexington proposal as the option 1 on $25 million of coverage. They did give us an option 2 up to $50 million. They had to blend Munich in, but they weren't even assigned Munich. That was assigned to another insurance agent. Then we had a response from Gallagher, and they gave us a couple of options. And then we got 3 different options from McGriff, Siebels, and Williams, and those are the agents that are here today, Johnny Fontenot and Robert Wagner. And so when we evaluated those, and again, working with our consultants, we determined that McGriff, Siebels, and Williams had done the best as far as bringing us some options and the best value of the options. And so at that time, we awarded them to go ahead and proceed into phase 3, where all markets were released and they could begin putting the plan together. And if we go to this spreadsheet, so we've got 3 different columns here. So we have the expiring policy of what we had with Insurica. We had the renewal offer that we talked about with Insurica, which is also Lexington. And then the plan that we ended up coming up with, that McGriff has been working the last couple of weeks trying to put this together, with the help of some of our consultants as well. So again, the current premium is the $949,000. The coverage that they were able to piece together is $500 million of coverage, which we think is adequate. The premium on that, though, does increase up to over $2.2 million, and that's really about where we thought it was going to end up. We were thinking $2 million or a little bit north of that. So we went from just under a 6-cent rate to a 14.3-cent rate. And the other, we talked about the wind hail limit. This one is a 2% deductible, and so potentially we could have about $32 million of exposure on a hail claim. However, we did ask them to look at putting a maximum in place, and so we did pay some additional money to put in a maximum that would cap it at $10 million. You never know what that's worth, but we know if we do get a big hailstorm, that will save the district $22 million on that one hail claim. So we felt like that was worth it. That, like I say, that did add quite a bit to the cost. Another thing that they were able to include in another coverage is the terrorism limit. And this is optional, it's really outside of that, but it would provide up to $125 million of coverage, or up to $1 million on an active shooter limit. But the premium on that's an additional $39,000. That is recommended by both of our consultants and has become pretty standard in the market now, unfortunately.
Randy?
Yes.
This is probably just a very basic question, but since insurance is not my game, my industry, I'm not familiar with a certain practice. So when we insure our home, I'm insuring that my entire investment in my home is valued, replacement, so that if it's destroyed, I can, rebuild. So in our expiring policy, if all of our assets are $1.6 billion, we've been insuring at $750 million. Probably, I'm assuming, because you figure, well, I'm not going to have a total loss.
That's
everywhere across the district. So is that typical?
That is
that's just how you do
typical
it.
on larger districts especially. I think what most people would tell you is if you've got a small town school that has 2 or 3 campuses and they're all right together, one tornado could easily take them all out. And so you'd want to insure all that property. But the more spread out and the larger you get, even if you had an F5 tornado, which is really, I think, the worst thing that can happen to a school in this area, it would be hard for a tornado to take out everything. And so we do some analysis looking at the placement of campuses and what their value is. And if you did see a tornado that came through, how much property could it really take out?
So we've decreased that by a third now to $500 million.
That's right.
Of coverage.
That's right.
So is that in order to make it affordable, kind of affordable?
I think that was for a couple of reasons. One is the challenge of trying to buy this much coverage. 2 is to make it more affordable. 3 is we did look at it, and we'll continue to look at that. Just there's some tools, some software, and some measurements now to really analyze how much coverage do you need, that you can look at what a storm could do to your property. And when our consultants looked at that, they felt like half of $500 million was adequate.
Okay.
Good question.
And I think what you're saying is if we suffered a $1.6 billion loss to this district, we probably have bigger problems than insurance.
Well,
That's
We're
true. I mean,
we're not around
if you
here
did,
to
the
even
entire
deal with it.
community is likely.
And I was thinking
gone.
about, the Harvey situation and, if that were to happen.
It would still not be a 1.6. It would still not be a 1.6. I mean, it's not going to wipe us out completely.
But if it's in excess of, this value, then either we make up a difference or we're in a really bad situation and we're looking for assistance.
I would expect it would probably become a FEMA issue if it was that large.
Okay, thank you.
Okay, a little bit more detail on that. The auto damage limit stayed about the same, except it does have a 2% wind and hail. So that's when our vehicles are parked if we do get a hailstorm, boiler machinery. And we talked about that cap again down here at the bottom on the hailstorm. So some analyzation of previous hailstorms and what it would have cost. And so one of our consultants looked at that. Any questions on the coverage or the premium? You can see how the rate went from 5.8 cents to 14.3. The 5.8 was an extraordinarily low premium, and I don't think anybody's seeing rates that low now. The 14.3 is much more the standard, especially in the DFW area. And so there's a couple of really hot spots that have been analyzed as far as in a high-rated hail zone. The DFW area is one. Of course, the Houston and coastal areas are for other storms. And then up in the Panhandle has also been rated very hot in hailstorms lately.
Randy, you used the word layered, or is that what you're about to?
I'm about to show you layering, which is a new concept for me. This is something that's been going on in the Houston area and the coastal areas for quite a while, just because insurance companies don't want a lot of exposure. And we've seen a lot of the big insurance companies that have pulled out of Texas. Travelers pulled out a few years ago. Fireman's Fund pulled out last year, some of the large ones. But they're really limiting, just like Lexington didn't want any more than $25 million of liability. And so what you can see here, these are the different layers. And so actually it took 12 different insurance carriers. They had to piece 12 different carriers together to come up with $500 million of coverage. And some of these layers have multiple companies that are sharing. And so for example, if you look at that first $10 million limit, we've got Lloyd's in there 2 different times. So they're in there basically for 75%, and then Star is in there for 35%. So it took 2 companies to buy the first layer at $10 million. That's going to be the most expensive layer because they're going to get the first exposure on any claim. So if you have 2 different hailstorms, one comes in at $8 million, they're going to be responsible for all that, except for deductible. You get another storm that comes in at $12 million, well, they're going to pay the first 10, and then the next $2 million would go into the next layer, if that makes sense. And so then we've got a $25 million layer above that, or I'm sorry, $15 million layer that would take us to 25. Then we've got another $75 million layer that would take us up to 100, another $100 million layer that would take us to 200, and another $300 million layer that would take us up to 500. And then you can see the companies, the different carriers, and how those are distributed in each layer. So it's like I said, it's become very complex. You can see why they need all markets to go out and try to put this together.
I can only imagine what it would be like to file a claim. Who's the first one that you file a claim with? And then, how does then the coverage,
That's right.
who picks up after that?
And sure,
That's
they
gotta
can
be-
answer that. It's really, that was one of the questions we had.
We'll designate one adjuster who will be your designated adjuster, and all of the carriers agree to whatever the adjuster says to the claim, they agree to. It's actually pretty easy. So you brought up Hurricane Harvey. The city of Houston had 18 carriers that had a $100 million claim. That claim was paid in about 60 days with one designated adjuster.
So how does it work when you have like a variety of carriers take at the $25 million level, then, I don't know, 5, 6 carriers there, and the claim is for that amount of money? How do you know? So each one of them, I'm trying to figure out how do you figure out how much comes from each?
Yeah, so the claim, so whatever their expenses in that layer, then it would be divided based on those percentages that you see.
So their
if they
liability
bought
is pro
10
rata.
That's right, pro rata.
Okay.
So if they'd bought 10% of that layer, they'd be responsible for 10% of that expense.
Okay, I see.
So,
Hopefully all that goes on behind the scenes and we don't have to deal with that.
Yeah, okay.
How many properties do we have in the 100-year floodplain? Do you happen to know? I mean, I see that we're getting flood insurance. I can't imagine we have many properties in the flood zone, do we? Do y'all know?
I'm not aware of that.
We ran the reports. I don't have it all the time.
Okay, yeah.
It's not that many.
Okay, so does that help visualize how this is working now? Okay, some additional terms of the agreement. McGriff is continuing to work on a 250. So we currently have a $100,000 minimum on a wind hail claim that we would be out the first 100,000, and then the 2% above that. And so they're looking at if we could go up to a $250,000 minimum, would it save enough in premium that would be worthwhile? And so they're going to continue to work on that this week. If we do get an option there that our consultants feel like is in our best interest and can show us that, then if you're okay with that, we would like to consider that. It does give us more, another 150,000 potentially exposure on the front end, but if we could save enough on the premium, then we think that might be worth it. This would be a 1-year contract with 4 one-year renewals if we can both agree to terms. So they would come back with a renewal offer every year, and we would have to agree to those terms. If we can, then it would be extended up to 4 more years. And then third, we always have this in our agreements that the district under state law can terminate any contract if the budget doesn't allow it. It would be hard to terminate property insurance, though. That's kind of a necessity, I would think. Are there any other questions?
So in terms of action, we need to take action on the award.
Correct.
About this.
But in addition to that, the other item you just mentioned about the, an increment of $250,000 minimum when hail deductible.
Correct.
You don't need action on that. You just want like a verbal.
Well, and that's why I put in here as
message.
presented, because we did talk about it here. However y'all would like to include that.
So I would suggest that we take action on the proposal that you've put before us.
Okay.
I don't think we need to take action on the other, but just say to you, give you some direction. Is
Okay.
that okay?
Sure.
Is that all right?
Mhm.
Okay. All right. Does anybody have any follow-up questions about this?
That was great research. It's I looked at what you were sending, that presentation that you were sending last night, and with the exception of inland marine that I didn't get, but other than that, looks like you got it all covered. Thank you.
Somewhat when we got to the finish line, it all kind of made sense, but it was a learning process as we went.
Yeah.
Okay. All right. Do I have a motion to award the RFP 2018-047 commercial property insurance for property, inland marine, boiler and machinery, and auto catastrophic insurance to McGriff, Siebels, and Williams, Inc. as presented?
So moved?
And do we have a second?
Second.
Any other discussion? All in favor, please raise your hand. Motion passes.
Thank you.
Okay, so on this secondary item that you've mentioned with regard to whether or not the board would like to see McGriff to continue to negotiate a policy with $250,000 minimum wind hail deductible. Given the analysis that you've presented, in your opinion, you believe it's financially advantageous to us in the total picture? It sounds to me like that would be something that would be, a good thing to proceed on. Other feedback?
I agree.
Okay.
Okay.
We'll pursue that. Thank you.
So if that develops, then you'll bring that back.
Yes.
Okay. Very good. Since we were having this meeting anyway, we have a couple of items on a consent agenda to consider. Are there any requests to remove an item or items from the consent agenda for additional discussion? All right. Hearing none. May I have a motion and a second to approve the consent agenda?
So moved.
Second?
All right, any discussion? All in favor, please raise your hand. Motion passes. And we now have a policy for second reading, and I invite Sarah Bonzer to introduce the policy that we have on the agenda this morning.
Thank you, President Bender. In Carla Oliver's absence today, she's asked me to fill in for her. And so we are bringing finalized Update 109 Policy FFI Local Student Welfare Freedom from Bullying to you on second reading. And we ask the board to consider adopting Policy FFI Local under second reading.
Thank you. Do I have a motion to adopt FFI Local under second reading?
So moved.
And do I have a second?
Second.
Any discussion? All in favor, please raise your hand. Motion passes. And with no further business, this meeting of the Board of Trustees is adjourned at 8:26 a.m.